Hey, my name's James Nicholson and welcome to the channel. Now, I've got some good news about interest rates. We need some of that, right? Because it's been all doom and gloom the last few weeks, but something has changed dramatically in the last few days. Now, this channel is all about my investment journey. We provide property news, property education, and I want you to join us on that journey as well. Now, we're building a portfolio for my two daughters. Georgia, who's 21, we've got 2 properties together already, and my little baby, Amelie, who is just 1. So how you can join us on that journey, you take that finger of power, you spin it around, and you smash that subscribe button over there and hit the bell notification. You don't want to miss out, guys. So, interest rates. They've been speculating that interest rates are going to go very, very high. And the Bank of England has pretty much confirmed that they're going to be going up significantly. And we're at 2.25%. as a base rate today, and mortgage companies are lending out as high as 6.25% because they're expecting the rates to rise significantly, and that rate there is driven off the back of the fact that it's a lot of work for them to change rates and get all of that stuff sorted, and mortgages take quite a period of time to go through. So they're pricing in higher interest rates already. Also, mortgage companies, they can't keep up with the demand at the moment. And that's one of the reasons why a lot of mortgage products were pulled from the market. Was purely because they were inundated with their own customers trying to fix stuff and new people trying to get fixed deals at good rates before the rates keep rising even further. So what's changed? Well, you'll see a couple of weeks ago now, the UK government had what called a mini budget, right? And the mini budget didn't go down well at all. The pound crashed. The stock markets really weren't comfortable with it and started to decline as well. And it's put a lot of pressure on Liz Truss. And so finally, she's changed Chancellor and we now have Jeremy Hunt. Now, Jeremy Hunt has come out yesterday at the time of recording this and just basically screwed up the mini budget, just ripped up that mini budget and said, look, we're not going to do all of this stuff, because they were going to reduce tax for higher income rate earners. They had a scheme that I think is really quite bad that they're cancelling, which is the energy costs. They were capping those for about a year and a half. That's actually going to end in April, which is a bit going to worry a lot of people if those rates still continue to rise and the market hasn't changed. And so they've ripped up everything. The pound has started to get stronger again. The markets have reacted positively to that. And so the markets forecast what they believe the interest rate is going to be. And that's the Bank of England rate is going to be by next year. Now, they were predicting that it would go as high as 6.6%. Now, if you look at this, the bank was charging 4% on top of the base rate. So if they did that here, which I don't think they would, but if they charge 4% on the 6.6, 4 points higher even, that means you'd have an interest rate potentially of 10%, which is really going to make a lot of people suffer, particularly those on interest-only mortgages. If you were on 0.5% and now you're going to 10%, potentially your payments are 20 times higher, which is just not going to work, right? You're going to give the keys back to your property and not move forward on that. Now, because of the rip up by Jeremy Hunt of this mini budget, and the reason the markets didn't like it was because to fund all of this stuff, the government was going to have to borrow so much money. And the problem with that was that they didn't have any plan to pay it back. That was the problem. It wasn't that necessarily that they were borrowing the money, is that they didn't show any way that they were going to possibly pay it back. And what that meant was probably going to happen was we were just going to print a ton more money, and inflation could have just kept going and going and going, which is not a good thing, right? We really want to get this inflation under control, guys. So the market now is pricing in that they expect interest rates will peak at 5.1%. That's a big difference from 6.6%. And you know what? That could still even get better. Hopefully, maybe, who knows for sure. But what if the interest rates peaked out at just 4.5%? That's going to make a big difference to a lot of people. That's going to make a big difference to property prices and potentially a market crash as well. So that is a real consideration here, and positively good news, right? And so look, would we prefer interest rates to stick here? Yes, of course we would. Of course we would, right? Now, what do I recommend to people? Well, I'm saying to people that don't over leverage yourselves, because some people watch these videos, right? And they're like, you're telling people to just go out and invest and leverage themselves, and then they're going to get stuck on these high rates of 10%. That's not smart. And that's clearly not what I'm saying. I'm saying if you are an investor and you find a good deal, good deals can work at whatever interest rate that you've got. You've got to know your numbers, right? When I started investing in 1999, we were paying the sort of rates that we're talking about potentially going to, right? It wasn't cheap to borrow money back then. We got very, very accustomed to cheap money after the 2008 credit crunch. And so deals will work to whatever interest rate there is. And so a deal today might not, but as a lot of the viewers have said on this channel, we will need a market correction if rates go up to 10% on what we're going to pay, right? Not the Bank of England's base rate, but what we're going to pay after the mortgage company put their bit on top. Then of course, property prices will drop. And so they will drop accordingly until they get to a price that works. Because here's what happens if they don't. No one will buy those properties. And so the seller then has to make a choice. Do they drop the price until it's at an amount that works, or do they just sit on it and not sell? And that's what happens when we get a market correction. You see, what will happen is it's not going to be everybody looking to sell their properties. It's just going to be people sitting there. And the data is already suggesting that first-time buyers, a lot of them have already made that decision to just sit out the next 2 years, to just carry on saving, build their deposit up, and hope that that market might have some sort of correction for them so they can get that property at a more affordable price. And maybe at that point, interest rates will be on the downward swing as well again. Now, property is a big part of the UK economy, and the market, whoever is in charge in Whitehall or the government, whoever is in charge, they're going to want the property market to continue. There's a lot of stuff that will keep that market high, and that is lack of supply at the moment. There are too many people needing houses, and the government need to pull their finger out and build more properties because we just don't have enough. That will stop prices skyrocketing like they have been. That will bring rents down. I'm an investor, but I still think that's the right thing to do because I prefer predictability. I'd rather my house price went up 2% a year and I just knew that that's what was going to happen and there wasn't going to be any crash, because then I can work deals around those numbers, right? And that is what I'm looking for in a market, is more stability. But I'd love to know, what do you think about this potentially being the new peak? I think it's big news. I think it's a big difference. Do comment below and let me know. Be nice, be kind in the comments. Some of you jump down my throat in these sort of videos. I'm not telling you what to do. I'm just saying potentially this could be some great opportunities for you. And that is better news than that. I'm sure you'd agree with that. But let me know your thoughts. Do comment below. Do like this video, guys. It really helps with YouTube to get more views on the channel. And that's what we're all about. We want to help more people understand property investing and maybe take that leap of faith at some point themselves. We're also running a live event very soon. In the description of this video is a link. If you click on the link, you can put your details in. You'll join our VIP list. Then as soon as tickets are out, you will get first option to grab a ticket before they go out to everybody else. So do that now. Click on that link, put your details in, and we'll see you very, very soon. I'm James Nicholson. Check out all my other videos on the channel, including this one right here. Bye for now.